in the shops, helping companies, helping the economy. Some are saying this is a powerful tool, in fact, to grow the economy, which is why we're even hearing calls for a change in the mandate of the Reserve Bank to focus on growth. But controlling inflation also, of course, helps the poor who suffer when prices go up. And the Reserve Bank has been at pains to point out that monetary policy can only do so much to change South Africa's growth trajectory. That's up to politicians that make and enforce policies. Let's get a global investor perspective now. We're joined by Peter Attard Montalto from Intellidex. He's watching this from London. Peter, thank you. Do you think the bank had that pressure in mind, cutting rates today?
Good evening. Well, I think the bank would be loath to basically admit there was any political pressure whatsoever, and I think, indeed, there was space to cut, even ignoring the political pressure. As you said, they've revised down their growth forecasts. That's provided a little bit of extra room in their models. They've revised down the near-term inflation forecast as well. That provides a little bit of room. But the overall sense, really, from the governor's statement after the MPC meeting today was really that there was actually very limited scope for future cuts potentially. This was what I would call a fiddle, a fine-tuning of monetary policy overall, and really ramming home the message that actually to get higher growth you would need much deeper structural reforms to accompany this.
Were you surprised the rand actually strengthening on the back of a rate cut?
Well, that came partly because markets had priced in a little bit of a 50 basis point cut to come. And I think people were also surprised by the fact that the statement wasn't actually particularly dovish. We view it as pretty neutral. That basically means that it wasn't highlighting the huge number of reasons for future cuts, was actually being very cautious on the risks around inflation, the risks around global interest rates. And I think that took people a little bit by surprise, actually, and is why the currency strengthened today.
He was saying, well, of course, this is possible because inflation is stable, but the Reserve Bank governor did say that things could go wrong with inflation, talking about state-owned entities here at home and global trends. How big are the risks to inflation in your mind?
Well, that was a key part of the statement where they highlighted Eskom, in particular, state enterprises, and in the question and answer, again, going into much more detail than normally you would expect a central bank to talk about around the increase in government bond issuance that will be required to fund the next steps of a bailout for Eskom, and the impact that would ultimately have on the room to cut rates further in the future. And so they really are highlighting what we call this fiscal risk issue quite a lot. And that's what markets in the short term are looking at less. But I think we'll come back to bite markets and the economy and taxpayers as we start thinking about the special appropriations bill that's going to come forward in Parliament to bail out Eskom next week.
But don't we sort of know now what Eskom is going to cost us? So it's been factored in over a number of years, but it'll be paid in advance. At least that figure is done and dusted. Does that help?
To some degree, but I think people are not appreciating fully the amount of government bond issuance that's really going to have to come. Remember, there is very little scope to cut expenditure elsewhere, really very little scope to raise VAT again, say, to pay for further bailouts. And so what we could well see next week is on top of 23 billion rand being given to Eskom this fiscal year and next fiscal year, maybe another 30 billion this fiscal year on top of that, and another 60 billion in the next fiscal year. So there's a lot of extra money coming towards Eskom. But I think the larger issue here, which the SAR will also be cognizant of, is basically, is there a sustainable plan actually behind the scenes to deal with Eskom? And that's where I'm getting a lot more doubtful now. I think there are huge political blockages and a lack of leadership on that. And that's really ultimately, I think, what will move markets in the medium run as we see things like unbundling and debt restructuring delayed.
Are the recent resignations worrying you? We haven't focused too much on that here in South Africa.
So the market largely took the resignation of the Treasurer, Andre Pillay, this week in its stride. The markets are generally what we call risk-on at the moment, given lower international rates. But there is a lot of concern behind the scenes, given how important that role is for keeping Eskom on the road, for allowing Eskom to issue debt and to manage its liquidity situation. And I think the markets are increasingly waking up to the fact that it's becoming practically impossible to find, or easily find at least, a new CEO and this new chief restructuring officer as well. So there is a lot more concern behind the scenes. We just happen to be in these very sort of positive global markets at the moment, which have allowed some of those concerns to be brushed under the carpet in the short term.
All right, so not great news on Eskom, but you mentioned the global markets. I mean, how much of what South Africa is doing has to do with the fact that the US may cut interest rates for the first time in 10 years this month? In this linked global economy, often we see interest rates coming down sort of at the same time around the world.
Exactly. So the market's pricing in a very significant chance that the Fed will cut rates, maybe by up to 50 basis points or more in the coming sort of 6 months or so. And as a result, we've seen other central banks cutting, in particular South Korea, India expected to cut further. But the SAB is basically, I think, at pains to want to differentiate themselves and to highlight the domestic idiosyncratic risks that mean they won't necessarily follow suit totally. So, some of the move of the cut today was because of that shift in global rates. But really the SAB highlighting that they can't just follow what's happening abroad and that the situation in the US is very different from the situation in South Africa.
All right, finally, let's wade into the big debate. So there are many in South Africa pushing for a different mandate for the bank, which would mean lower interest rates. So could we use this as an example? A 25 basis points cut, can that actually boost economic growth in South Africa?
Well, put it this way, we're not changing our growth forecast. We're in line with the SAB this year at 0.6%. We're a touch below them for next year at 1.5%. But we're not changing any forecast off the back of this 25 basis point cut. And that's basically because the cut, for me, reinforces or applies a floor under very weak sentiment, but really sentiment has been driven, and growth, slow recovery in growth, has been driven by wider issues around policy uncertainty and a lack of reform overall, as opposed to access to credit or the price of credit. And that's why we're not really changing forecasts. But I think on this point of a mandate, it's interesting to consider the cut today came in part because the SAB is seeing lower growth for longer, and that allows some space for a cut. But really what that's saying is that unemployment growth will be remaining lower for longer. So there is already, within this flexible inflation mandate, some semblance or proxies of employment already. And in some sense, we did see that today.
All right. Thank you so much. Great as always, Peter Attard Montalto from Intellidex in London. And concerning that, a global investor is saying losing faith in the reforms at Eskom will keep a track of what's happening there. Now, a big corporate lawsuit. Lawyers